Rhynhardt, did you hear that rand price? 8 rand 8 cents. You wonder if the rand is now headed back to 8 rand and could dip below that. What are your thoughts on that?
Yeah, look, Sam, I think it's entirely plausible. I mean, as long as the kind of risk on trade does continue, then we will probably see the rand breach the 8 rand mark to the dollar. I think at least in the short term, risk sentiment has certainly turned for the better. There's been slightly better short-term data now out of the US, but kind of the short-term rally is I think much more driven by the prospect of further stimulus. It's as you pointed out, widely anticipated that the European Central Bank will lower interest rates yet again. We think that there might be further rate cuts from China on the cards, and then like Kiwi3 out of the US seemed also fairly plausible. So I think for now the market sentiment has certainly shifted from the woes of Europe to slightly more positive news in the short term, and I think it is entirely plausible that we will see new lows on the rand.
In terms of the gold price, it moved up above $1,600 today, also rallying hard on the day. Do you think that the argument around gold being an inflation hedge stands, and the fact that we have expectations for stimulus in terms of the cutting of interest rates would mean that it would be a good reason to come into the market and buy gold because interest rates would be sitting at these historical lows?
Yes, I think so. I think that the argument of real negative real interest rates is probably more powerful than the argument for an inflation hedge. I don't think inflation is really an issue at the moment, but what is an issue is very low yield or very low yields globally. So investors want a place to put their money, and with bond yields at record lows, I think that gold will probably will continue to do relatively well. It does tend to lag in a big risk-on move, like you saw now in the past day or so. So other risk assets did slightly better, but I think for the medium term, I think bond yields will probably remain relatively low. I think interest rates could move lower, and that is all very supportive for gold.
Let's look at local data. The vehicle sales number coming through, of course, has a positive feed-through effect when it comes to stock prices like Imperial. And looking at that share price, it was up by 3.75% today. So the top gainer on the local market, not the top gainer when it comes to volume traded. But do you think that this strong share price can be maintained for Imperial?
Look, I think so. I mean, if I look at the rating of Imperial just on a normal PE multiple basis, I think it's about 11 times historic earnings, because I think that they will have very strong earnings growth when they report. They've got a June year end, so relative to the industrial market, it certainly doesn't look very expensive. However, I would caution that I think the strong earnings growth that Imperial has shown over the last year or two is probably something of the past. Even though vehicle sales do remain relatively robust, and especially the brands to which Imperial are exposed to, like Hyundai's and say Kia brand, they continue to take market share. But I think into the next year or the next 12 months, earnings growth will probably not be as robust. So we tend to think that the share is relatively fairly valued, but there could be more upside, because I do think that results will be very strong indeed.
So Absa's share price is slightly firmer on the day today, up by 0.7%, closing just shy of 137 rand. What do you think the feed-through implications are for this whole Barclays fiasco that's playing out for the parent company for Absa right now? Because there have been management shake-ups at Absa, and of course now we're seeing a very clear management shake-ups at the parent company.
Look, I think the general read-through, I don't think it's very good. However, I don't think it's very significant. What I can say is that the feeling that we tend to get is that the greater Barclays group is certainly playing a much more active managerial role, I think, in the greater, Absa group. And as you pointed out, there has been quite a lot of management changes domestically for ABSA, so it's probably not great that there's a bit of a board shake-up in like London. How it's going to play out, I'm not sure, but it's not surprising to see the ABSA share price lagging the other banks fairly significantly. And then, of course, on the back of that, we've also had a fairly disappointing trading update from ABSA, like in the last week or so, which is certainly adding to the recent share price weakness.
Okay, so MTN also one of the gainers on the day today, and coming out saying that the US Supreme Court has no jurisdiction over issues that Turkcell has raised right now. What did you think about MTN's argument for saying that they've appealed for the US Supreme Court to drop the court action or the impending court case from Turkcell?
Look, I'm no lawyer, but it does seem to me that MTN might have a point. Yes, this subject matter has no jurisdiction in like US courts, and also I don't think US courts can make any ruling over like MTN whatsoever. So I think it's a bit of gamesmanship almost, and I think it's going to probably drag on for I think many more months. I'm not quite sure how it's going to end up, but in the short term, it will probably just continue to be a bit of an overhang for the MTN share price. However, if it can be resolved, I think it will be greatly positive. The share is not expensive. It has certainly lagged the global, say, peer group, but I think we're not quite there yet. I think there's probably more kind of news flow to come.
Okay, let's get your views on sectors right now and how we're expecting sectors to perform, because we were talking about the banking sector earlier and teetering around that historic high. Do you have any bias towards cyclicals or defensives at the moment?
Look, I think in the short term, I think the trade is probably more towards cyclicals. They have done very badly, and I think the performance of some of the cyclical sectors, especially resources relative to our local financials and local industrials, have been quite extreme. So if markets do continue to rally, I think that most of the cyclical and therefore resource shares will actually tend to outperform. However, medium term wise, I'm a little bit more cautious. I think it's still very prudent to have some element of defensiveness to your portfolio. But some areas of the market do look very expensive to me, especially SA industrials. I tend to prefer the banks. The PE multiples are far more palatable. I think they will have a relatively good earnings season, with the exception of ABSA, and then resource shares are very cheap. However, there my feeling is that the general level of commodity prices still remains relatively high, and there is certainly downside to the prices of the underlying commodities.
Well, there we go. Rhynhardt Roodt, equity analyst at Investec Asset Management.